Hello everyone, here Chris Caprice, SecondSkiesForex.com. So we have a video here for you on Ichimoku Cloud trading, particularly on trading Kumo breaks and a couple key elements you generally want in almost all Kumo breaks. So Kumo breaks is a strategy within the Ichimoku Cloud that's specifically designed to catch reversals. Why is that? Well, the Kumo itself represents support and resistance on that particular time frame. We're here looking at a pound yen on a 30-minute chart, so the Kumo represents support and resistance on the 30-minute time frame for this pair. Now, if the Kumo represents support and resistance, and when we're above it, the Kumo is below it, that means that the Kumo represents support. On the other side of the market, the Kumo represents resistance. So right here we have a situation where the Kumo is representing support. If the Kumo represents support and resistance, then the bigger that support is, the bigger the chances that it's going to cause a strong reversal. Kind of like if Euro breaks through 160 because of its huge significance of being in such a strong resistance barrier, then that has greater impact than if it breaks 148.22. So the whole point is that the thicker the Kumo, the greater the chance it's going to produce a strong reversal. And so this is key element number one. We're looking for thick Kumo setups, where the price is on one side of the Kumo and it has it's say above it, and then there's a thick Kumo below it, and then price breaks below that. The other key element we want to look for is time. The longer price action spends on one side of the Kumo, the stronger the trend had to be to create price's ability to stay on one side of the market, to not even touch the Kumo during that time period. So the longer it stays on one side of the Kumo, the stronger that trend is. What that translates into from an order flow perspective is that to keep the pound yen, in this case, above the 30-minute Kumo for a long period of time, the order flow has to be very strong and consistent, and there has to be a lot of orders piled on the buy side here. What that means is that if we have a lot of orders piled in on the buy side, then when the market does reverse, we have the scales between the buyers and the sellers is heavily tipped to the buys. So if things start to reverse and look bad for the bulls, they're going to have to exit out of their positions. Well, since we have a lot of people on the buy side or long pound yen, they have to exit their positions by taking shorts. So that gets fuel to the fire for the reversal that's starting to form at that time. So those are the two key elements that we're looking for here, and we have a really good example of this in the pound yen. Now, we had NFP last Friday, and markets had been stale for a couple days leading up to NFP. And then the markets, got really timid, and all of a sudden NFP comes out, and boom, they take off. The NFP report was definitely, for more risk. And so what happened was here is the market started to take off, yen pairs started to climb. People started to buy risk, buy higher yielding pairs. And the yen pair, pound yen, jumped 250 pips in less than 2.5 hours. Then it stabilized up at the top and closed the week up at the top. Generally when pairs advance really strongly and close up the top, that usually sets up situations where they're going to continue. But the pound yen does something interesting. Instead of holding at the top and then making new highs, it starts to actually make slightly lower lows. In that process of making lower lows, we see a thick Kumo below it, suggesting that, well, okay, there's a lot of support here because the Kumo's thick. If it breaks below this, this could be a very powerful reversal. Look what happens once it gets below the Kijun line. And the Kijun line is also called the Kijun Sen. Translation of that is trend line. It gets below it, and then it starts to treat the Kijun Sen as resistance instead of treating it as support like it was before, here and along here. That suggests that possibly the tables are starting to turn on it. It's also finding significantly lower lows, and this one right here makes a new low for the last 15-20 hours. Pretty significant. Then all of a sudden it starts a very sharp advance into the Kumo. Now if it had performed a tentative advance in here and took like 6, 10, 12 candles to get through here, that would suggest there wasn't much force necessarily behind the reversal efforts there. However, this thing diced through to the other side of the Kumo in less than 3 candles. It took about a half a candle to get through, a full candle here, and another one, and it touched the other side. This is what's interesting about it. And this is a very common thing that pairs will do when they break into the Kumo. It's often the case they will get to the Senku Span B, hit the far end of it here, and this is the Senku Span B, the blue colored line and then push back. It does push back, right exactly at the Senkou span B. But remember how it used the Kijun as resistance? Look what it starts to use as resistance now, the Tenkin. What that means is that in the initial, this is kind of like the last defense. The Kijun is generally referred to as the last defense, basically, other than the Kumo. It was using the last defense as resistance. Now it's treating the front line as resistance, suggesting that the reversal efforts are much stronger than they were over here. It now treats the Tenkin as resistance, moves a little sideways, and then all of a sudden dumps out of it, making a new significant low, and creates a very impressive run here. It broke out of the Kumo at approximately 135.73, makes a run for 6 candles straight, which is 3 hours, and drops all the way to a low of 134.81. So about 100 pips in about 3 hours. Then does a little bit of a pullback, and then starts to make new lows and drops all the way down to 134, where it starts to base a little bit. So this is how powerful Kumo breaks can be when you have a lot of factors in play. And the two key elements for this video that you want to look out for is time on one side of the market and also the thickness of the Kumo. Now, if you'd like to learn more advanced trading strategies, other factors, the other key elements, we actually tested over 10 years of data for 6 factors that you'd want to have when trading Kumo breaks. If you want to get access to this kind of data, if you want to learn how to trade advanced Kumo breaks on a proprietary quantitative level with quantitative data supporting it, and other various strategies on the Ichimoku Cloud, then check out our Advanced Ichimoku course, which you can find at secondskiesforex.com. Until then, I want to bid you all adieu. I want to wish you good luck trading, and take care, everyone. Good trading, everyone.